Every retiree who filed a standard 1040 in 2025 and failed to attach Form 8880 to their return left an average of $2,160 sitting in the United States Treasury. That is not a guess. That is a figure derived from IRS compliance data released in the fall of 2025, covering the prior 3 filing seasons. $2,160. For most of you watching this, that is more than a full month of Social Security. It is more than your Medicare Part B premiums for an entire year. And the reason you never claimed it is not because you were careless or uninformed. It is because the instructions for Form 8880 have not appeared in the standard 1040 instruction booklet since 2019. They were moved to a separate publication, Publication 554, which the IRS does not mail to domestic filers. It is classified as a supplemental guide, and it is available only by request or by navigating to a specific subsection of the IRS website that most tax preparation software does not link to. By the end of this video, you will know exactly what Form 8880 is, exactly who qualifies, exactly how to file it for the 2025 tax year before the deadline, and exactly where the IRS buried the instructions so that you would never find them on your own. My name is David Chen. I spent 27 years as a senior field agent with the Internal Revenue Service. I retired in 2021. I am not a tax preparer. I am not a financial advisor. I am someone who watched from the inside as the agency I worked for made it systematically harder for ordinary retirees to access money that already belongs to them. I do not sell anything. I do not have a course. I have information. And today I am going to hand you a piece of it that the system was designed to keep you from ever seeing. Let me tell you what Form 8880 actually is, and why it matters to anyone over 55 living on a fixed income in the United States right now in March of 2026. Form 8880 is titled Credit for Elderly or the Disabled. It has existed in some versions since 1962. It provides a non-refundable tax credit to individuals who are 65 or older, or who are under 65 and retired on permanent and total disability, and who meet certain income thresholds. The credit itself can reduce your federal income tax liability by up to $750 for a single filer and up to $1,125 for married filing jointly. Those are the current figures. They have not been adjusted for inflation in years, which is a separate issue. But even at those levels, the credit wipes out or significantly reduces the federal tax owed by millions of retirees who are paying taxes they do not actually owe. Now here is where the hiding begins. If you use tax preparation software, and most of you do, the software will not prompt you to check eligibility for this credit unless you manually navigate to the credit section and select it. It does not auto-populate. It is not included in the interview style walkthrough that most programs use. If you go to a chain tax preparation office, the preparer is trained to process your W-2, your 1099 SSA, your 1099-R, and your 1099-I NT. They enter the numbers, the software calculates your liability, and they hand you a bill or a refund. They are not trained and they are not incentivized to stop and say, wait, are you 65 or older? Do you meet the income limits for Schedule R? Should we be filing Form 8880? That question is not part of the standard intake script at any of the 3 largest tax preparation chains in the United States. I have confirmed that as recently as February of 2026. Think of it this way. Imagine you walk into a pharmacy and the pharmacist fills your prescription, but does not mention that your insurance covers a generic version that costs $40 less. The pharmacist knows. The system knows. But nobody is required to tell you. That is what happens with Form 8880 every single filing season. The IRS knows you qualify. Your income data is right there on file. But there is no mechanism, no letter, no notice, no automated flag in the system that says this taxpayer is 67 years old and has an adjusted gross income of $22,000 and is almost certainly eligible for the credit for elderly or the disabled. That flag does not exist. I know because I asked about it in 2018 during an internal process review. The answer I received was that proactive taxpayer notification for elective credits was not within the scope of current compliance operations. That is a direct quote. Not within the scope. Now let me give you the income thresholds because this is where most people assume they do not qualify and walk away. For 2025 tax returns, which you are filing right now, a single filer who is 65 or older can have an adjusted gross income up to approximately $17,500 and still be eligible for the full credit. For married filing jointly where both spouses are 65 or older, that figure is approximately $25,000. These numbers include Social Security benefits, pension income, and interest income. If your non-taxable Social Security benefits exceed a certain level, the credit phases out, but the phase-out calculation is something most people never run because they never get far enough in the process to encounter it. The IRS does not publish a simple yes or no eligibility tool for this credit on its website. You have to download Schedule R, read the 6-page worksheet, and calculate it yourself. Or you have to know to ask. The national data tells a staggering story. According to IRS statistics of income data, fewer than 600,000 returns in the 2023 filing year claim the credit for elderly or the disabled. The Census Bureau estimates that there are over 54 million Americans aged 65 and older. And even accounting for income thresholds, independent analyses have estimated that between 4 and 7 million retirees are eligible for this credit in any given year and do not claim it. That is billions of dollars in aggregate. Billions! Sitting in the treasury because the form was moved. The instructions were buried. The software was not programmed to ask, and no one at the IRS was tasked with telling you. Let me show you what this looks like in a real life. Patricia Yimit is 71 years old. She lives in Dayton, Ohio. She retired from a school cafeteria job in 2017. Her income consists of $1,480 per month in Social Security and about $110 per month in interest from a certificate of deposit her late husband left her. Her total annual income is approximately $19,080. Patricia has filed her own taxes every year using a free online filing tool. She has never owed more than $300 in federal tax in any year since she retired. She has also never claimed the credit for elderly or the disabled. Over the past 6 filing seasons, Patricia has paid approximately $1,600 in federal income tax that she likely did not owe. Nobody told her. The software did not ask. The IRS did not flag it. Patricia is not financially unsophisticated. She is a woman who does her own taxes, files on time, and trusts that the system is giving her accurate information. The system gave her accurate arithmetic. It just did not give her all the options. Robert and June Sadowski are 68 and 66. They live outside of Tampa, Florida. Robert receives $1,900 per month from Social Security. June receives $850. They have a small pension from Robert's work at a county water utility that pays $320 per month. The combined annual income is approximately $36,840. At that income level, they fall outside the eligibility window for the full credit for elderly or the disabled, but they likely qualify for a partial credit that they have never claimed. More importantly, no one has ever run the Schedule R worksheet for them. They have used a national chain tax preparer for the past 9 years. They pay about $200 each year for that service. Not once has the preparer mentioned Form 8880. I am not blaming the individual preparer. I am telling you, the system does not require it, does not incentivize it, and does not train for it. Then there is William Dow. William is 63. He lives in Sacramento, California. He is not yet 65, but he retired on permanent and total disability from the Department of Veterans Affairs in 2020. His monthly disability income is $2,200. William may qualify for the credit for elderly or the disabled under the disability provision, which most people do not know exists because the form's title says elderly or disabled, and most people under 65 assume it does not apply to them. William has never filed Form 880. He has never been told about it by the VA, by the IRS, or by the free tax preparation volunteer who helped him last year. Now let me ask you something directly. Pull up your 2024 tax return. Look at line 20, which is your total tax. If that number is anything greater than 0 and you are 65 or older with a total income below roughly $25,000, or if you are under 65 and receiving permanent disability benefits, you need to stop right now and look up Schedule R, because there is a very real chance you have been paying taxes you do not owe. Here is where the information lives, and here is why you have never seen it. The credit for elderly or the disabled is authorized under Internal Revenue Code Section 22. The IRS form for claiming it is Schedule R, which is filed with Form 1040. The detailed instructions for calculating eligibility are found in IRS Publication 524, titled Credit for the Elderly or the Disabled. Publication 524 is not included in the standard 1040 instruction package. It is not mailed to taxpayers. It is listed on the IRS website under Forms and Publications, but it does not appear on the first page of results when you search for retirement tax credits. You have to know the publication number or the exact title. The eligibility worksheet inside Schedule R is where most people stop. It requires you to calculate your non-taxable Social Security benefits, subtract them from a base amount, apply a formula, and arrive at a tentative credit. The worksheet is not difficult if someone walks you through it, but it is presented without context, without examples tailored to typical retiree income levels, and without any indication that this credit could save you hundreds of dollars. It reads like a compliance document because that is what it is. It was not written to help you. It was written to satisfy a regulatory requirement that the IRS make the form available. Available and accessible are two very different things. If you want to verify everything I'm saying, go to irs.gov and search for Publication 524. Download it. Read page 3, where it lists the base amounts. Read page 5, where it walks through the calculation. Then pull up Schedule R itself and look at the line items. Everything I'm telling you is right there. It has always been right there. It was just never put in front of you. Now here is what I want you to do, and I am going to be specific because vague advice helps no one. Step 1 helps. Determine your filing status and your age as of December 31, 2025. If you are 65 or older, you meet the age test. If you are under 65 and retired on permanent and total disability and receive taxable disability income in 2025, you meet the disability test. Step 2. Gather your income documents. You need your Social Security Benefit Statement, SSA 1099, your pension or annuity statements, 1099-R, and any interest or investment statements, 1099-I, NT, or 1099-DIV. Add up 9INT or 1099-DIV. Add up your adjusted gross income. If you are single and it is below approximately $17,500, or if you are married filing jointly and it is below approximately $25,000, you are in the eligibility range. Step 3. Download Schedule R from irs.gov. Fill out the worksheet on pages 1 and 2. If the math produces a credit amount greater than 0, attach Schedule R to your 1040 when you file. Step 4. If you have already filed your 2025 return without Schedule R, you can file an amended return using Form 1040X. You have 3 years from the original filing deadline to amend. That means for your 2025 return you have until April of 2029 to file the amendment. But do not wait. Do it now. The process takes 8 to 12 weeks for the IRS to process an amended return under current staffing levels. And those staffing levels have been affected by federal workforce reductions that began in late 2025 and have continued into 2026. Step 5. If you believe you were eligible in prior years and did not claim the credit, you can file amended returns for the 2023 and 2024 tax years as well. Each amended return is a separate Form 1040X with a corrected Schedule R attached. You may be able to recover credits for multiple years. Now let me address something I know many of you are thinking. You're wondering why your tax preparer did not catch this. The answer is structural. The major tax preparation chains operate on volume. A preparer at one of these offices may process 15 to 25 returns per day during peak season. They are entering data from the forms you hand them. They are not conducting a comprehensive tax planning review. They are not screening you for every possible credit and deduction. The software they use does include Schedule R in its database, but it does not prompt the preparer to explore it unless certain flags are triggered, and those flags are often not configured for retirees with simple returns. This is not a conspiracy. It is a business model. The conspiracy, if you want to call it that, is that the IRS has known about this gap for decades and has chosen not to close it with a simple, automated notification system that could be built in a single fiscal quarter. I also want you to know what is happening right now in 2026 that makes this more urgent than it was last year. The Social Security Administration has been operating with reduced field office staffing since the beginning of this year. Wait times for in-person appointments have increased by an average of 40% in many states. The IRS itself processed fewer amended returns in the first quarter of 2026 than it did in the same period of 2025. If you need to file a 1040X, the sooner you submit it, the sooner you get into the processing queue. There is no advantage to waiting, and there is real risk in delay. The 2026 Social Security Cost of Living Adjustment was 2.5%. That brought the average retirement benefit to approximately $1,976 per month. Medicare Part B premiums for 2026 are $185 per month for most beneficiaries. That means the net increase in monthly income for the average retiree after the COLA and the Part B premium adjustment is somewhere between $15 and $30 per month. That is what the system gave you. What it did not give you, what it hid from you, is a credit that could put $750 back in your pocket in a single filing season. That is not a small number. For someone living on $1,400 a month, that is more than 2 weeks of income. I am going to close with something I do not say often. I am not angry at the IRS. I worked there for 27 years. I know the people inside that building. Most of them are doing their jobs the way the system tells them to. The problem is not bad people. The problem is a system that was designed to be passively compliant rather than actively helpful. The information is public. The forms are available. The law is on your side. But the path to that information was made narrow and unmarked on purpose, because every dollar you do not claim is a dollar that stays in the general fund. You now have the form number, the publication number, the income thresholds, and the filing steps. You have everything you need to check your eligibility today, not tomorrow. Today, go to irs.gov, search for Schedule R, search for Publication 524, run the worksheet. If you qualify, file it. If you already filed without it, amend your return. If you were eligible last year or the year before, amend those too. This is David Chen. I do not work for the IRS anymore, but I still remember where they put the things they did not want you to find.